All right, ladies and gentlemen, you know I like to be early. We're a few minutes early. We're going to let everybody get in here, catch up, and we will see what we got going on. We got plenty to go over. Plenty. Of course, if you're joining me now, hit that like, hit that subscribe. I bring you data. I bring you news. I bring you live trading. I bring you commentary. I bring you everything your sweet, sweet ears could ask for when it came to the market, okay? I love the market. I have a passion for trading, and that's why I am here. That's why I'm here doing this for you. I regurgitate all the knowledge that I've learned from all of the big hitters, all the big, all the heavy hitters out there. So, we're going to wait for everybody to hop in here. We're going to go over the CME Fed rate tool, okay? The reason why we're going to go over that is because it's going to show us when the Fed is most likely to cut those rates. Why do we want to look at that? Because when rates get cut, the market goes up. I'll say that again. When the rates get cut, the market goes up. We want to make sure that we know when those rates are going to get cut, because then the market will go up. We want to know when the market could go up because we want to make that money, baby. So make sure you pay attention to that. And then, of course, Nilish, welcome. Good to see you, brother. We're in YouTube today. Go ahead and join the live stream for me. Also, guys, what we're going to do is we're going to look at U.S. inflation. We're going to look at how a lot of people think. A lot of people seem to think, hey, we're going to come down. We're going to come down, but we're only going to come down to 3%, and we're going to stay at 3%. But old Papa Powell constantly is saying 2%. He is going to keep the Fed rate at 5% until he starts to see the economy contract so we can come down to the Fed's inflation of 2%. That's the average. We are we average growing inflation on 2% of all your goods, okay? We're also going to go over all the data that we went over currently this week, okay? I got all that up for you right here. I'm hearing a lot of cool noises in my ear. I don't know where they're coming from, but yeah, guys, we got a lot to go over today. I'm really pumped. I'm really pumped to be here today. We also are going to go over the full market, the S&P 500, the IWM, the QQQs. We're going to make sure everybody is well aware of what's going on in the market, and make sure my mic's working, make sure everything's good. Can you guys hear me okay in chat? Give me the old 1 2 1 2. Let me know you can hear me in the chat just fine, so that way I know I'm good on my end. I could be the DJ, you know what I mean, like with something in my ear so I can hear myself again, but I'm pumped. I'm pumped to be here, guys. We're gonna give it just a few more minutes. And of course, guys, if you are here and you're just now, yeah, there we go, I can hear myself. We're good to go. Yeah, baby. Thanks, B. Stewie. B. Stewie's at the campground. Hey, he's dedicated. He's at the campground today. He's still watching the live stream, baby. If you're not here to support, you're here to listen, you're here to learn, and you're here to do big things, baby. So we'll give it a few more minutes, and then we're going to go over the S&P 500, the IWM, the QQQs. Then, of course, we'll go over the stocks that we've missed, the stocks that we're in, and the stocks that are setting up for the very near future. That's exactly what we want to see, baby. We got a big, big week ahead of us next week. And tomorrow should be a decent day. Now, Fridays usually are a little less volatile, but we always want to make sure we're prepared, because sometimes that can be complete nonsense and we get a crazy, crazy day before the weekend. Now, usually they say in May you sell and go away. Not recently. In May we buy. We buy. We are go, baby. We are go. And I think what we're going to do is we're going to jump right into it, guys. So what we always like to start with is the S&P 500, okay? The S&P 500, why? It is the benchmark for all of your institutional ownerships. It's my benchmark. Put it this way, if I can't make more than 7% on my account each year, if I can't make 7% each year on my account, I might as well just throw it in the S&P 500 long term. Now, I do hold some long-term accounts in the VOO and VTI, but I do not put all of my money in it. It's just a little side hustle, if you will, okay? The whole reason why I like to have that little side hustle in there is plain and simple, because that is going to be my future. That's a buy and hold forever, okay? And that's the VOO. That's this right here. You can see I got in 6 here. I got in 10 more right at the all-time highs. So we're holding 16 in this. We're holding 18 in the VTI. This is the long-term investing account, okay? So when we look at the S&P 500, why do we want to know what's going on in the overall market? Because just because you like Tesla doesn't mean Tesla's going to go up, but Tesla is more likely to go up if the S&P 500 is going up. Now that's a bad example because as the S&P 500 has gone up, Tesla has not followed suit. That's a big issue, right? So the S&P 500, when it rises, it brings all the other things up with it. So the S&P 500 here is sitting at 528.89. We finally got a small pullback today after many mucho pushes up to the north side. You've seen a big push sideways, push sideways, push, breaking those all-time highs, and then, well, we're having an inside day today, so you can't really say this is much of a pullback. But guys, I've been telling you, I want to see it come back to this 10-day moving average. At this point, the best thing I would like to see is it trade within this 525 to this 530 and just trade sideways and let this 10-day moving average catch up. I still have about, I won't give you the dollar amount, but I have a very large amount sitting on the side that I have a financial investor that is keeping an eye on this. And he called me, he's like, Dave, you want to get back in? Because I exited here. I exited the market at the 21-day moving average, and I've been waiting ever since we pushed up here and had a breakthrough day and pushed through this 50-day moving average. I've been waiting to come back and retest the 50. Then I was waiting to come back and retest the 10, and we have not came back to retest. Now, I'm not having that fear of missing out. I'm not going to just hop right back in. I'm waiting for it. So the S&P 500 is looking really good here. I do really like the fact that we pushed up through this. We made a good push, and the pullback is nice. It's nice to see. It's not on a huge amount of volume. Right at the end of the day, we had a pullback, but you can see in pre-market, we kind of pulled right ahead on there. So the S&P 500 is looking really good here. I really like this big U cup shape handle. We got this maybe a handle forming here, okay, but we got a nice cup and we got a nice little handle here. Even if we look at this on the weekly, you can see this is more of a William O'Neill's type of cup. Now this is an ETF, this isn't a stock, so just keep that in mind. So cup handle, it's looking good. I like the S&P 500. I like where it's at. Next up is going to be the IWM. Why are we looking at the IWM? It's the small cap, okay? The small and mid cap. We want to see this thing continue to stay above this 205 area. I told you guys multiple times at this $200 area, this was its resistance. We even drew this line here for you, and it busted up through, held the 50-day moving average, and now is continuing higher. Now we are at an area of resistance. We want to see it break through. We want to see it stay strong here. If you guys are just joining me, we're just going over the overall market. We're only on the IWM. Next is going to be the QQQs, and then trust me, we're going to get into the juicy stuff here, guys. It's going to be juicy. It's going to be can't wait. QQQs, this is your tech heavy. This thing is leading. It's looking absolutely amazing. Well extended now from this 10-day moving average. Why do I always bring up, well, it's extended. It's extended. You guys have been hearing me say this for a couple weeks now. Well, why? Why do I keep talking about it? Because when things get extended like this, it always pulls back, and it usually pulls back hard and fast, and it retests, okay? The QQQ and the S&P 500, their retests were on the 21-day moving average. Multiple times, okay? That's why the 21-day moving average is my benchmark for the S&P 500 and the QQQs. That's why when we are extended from the 10 and 21-day moving average, I say we are extended. When we broke down below the 21-day moving average, I said, guys, we're hands off. We need to be careful. And sure enough, there was reason there that we needed to be careful, okay? Now, we're popping up here. We're looking good. We're above the 50-day. We're above all-time new highs. Now we are still extended, okay? Now we're getting a little bit of a pullback. And, of course, we could still move higher and faster, but I can't get in at these highs, right? I want to wait for a pullback to really step on the gas. Now, I do have a few positions, and we'll go over that very soon. But those few positions, they aren't full positions. Those are me dabbling my feet into it. It's me making a little bit of money, but it's not me making institutional money, right? I mean, I can't wait till I'm to that point, right? 30K a day, let's go, baby. I'm buying that 74 bubble top Impala. Let's go. It's going to sit in the back. I'll trade in it. I will. I'm going to put my trade. I'll take out the window and we'll mount on the hood. Not actually mount. Don't be Stewie. Don't kill me. We're not going to drill any holes or nothing. But once we have that bubble top sitting in there, we'll have, it's going to be sweet. I honestly think it would be so cool if we could trade within a car. So you get in, you sit down, you got your cup holder here so I can put my water next to me, and then the window's out, and then you have all your screens here, and you can set up your all your stuff on the dashboard as kind of your desktop, or like you just set it in front of you, you know? I don't know, I got big plans, but we'll see. We'll see. My first 100,000. My first 100,000. I got a few places I want to go. My first 100,000. And then we're going to get that bubble top, and we're going to keep on trading, baby, because nothing's going to stop me from trading. I don't care if we got $3 million in the bank. We're going to keep on trading, baby. Why not? Why not me? All right, so that's the QQQs. Let's go ahead and bring up a few more here. The NASDAQ. The NASDAQ's doing awesome, having that cute little pullback, but still extended. As we know, the Dow Jones Industrial is looking quite the same. Broken all-time highs, now coming back down here to retest that. Still extended a little. Let's look at the VIX volatility, guys. Look at this. The VIX just is going lower. There is no fear in this market right now. Now, I promise you there's going to be some. There will be some. 63 bubble top. Yes, sir. 63 bubble top. You know, I don't know why I keep saying, what did I say, 74? I don't know. 63 bubble top. That's right. That's going to be a beautiful thing. It will be. It's going to be a beautiful thing once I get that bubble top, baby. It's going to be sweet. But by the time I end up getting it, it's going to be 3 times the amount of money, because that thing's going to be ancient. They're going to have ancient plates rather than historic plates. They'll have ancient plates on it. It'll come with a T-Rex skull. The dollar had a little pop today. You can see there's always an inverse correlation to the market. When the dollar goes up, the market comes down, and we got a little bit of that. Bitcoin, we always want to take a look at Bitcoin. Now, you guys knew that I drew this down here. It's popped back up, and it's retesting its 50-day moving average. I expect there to be some resistance here, because the last time we were here, we found resistance at the 50-day. Also, when we broke the 50-day, after holding the 50-day for so long, it broke down hard. So the psychology behind this is it held the 50-day, it broke the 50-day and fell hard. It came back up, as retesting the 50-day and came down. It's retesting again. I'm expecting it to pull back. Also, we have this longer-term downtrend. Okay, so there's multiple reasons why this might be an issue here. This might be why we might further head down on Bitcoin. Also, for a little while there, if you guys remember, Bitcoin was actually following the overall market, which was really nice. It was really nice to see Bitcoin following the overall market. But now it's not. Now it's more lagging the market. Okay. We also have gold. So gold's looking really good here. I don't know if it's going to be able to break these all-time highs, or if it's going to continue on its downtrend. Like I've told you guys before, I'm very speculative when it comes to gold, and there's reasons for it. The whole reason why I'm speculative of gold is just simply because I have people, random people, not people like you and I. If you're here and you're keeping an eye on gold, and you're watching the S&P 500 with me, we're looking at this thing every day, right? But I have random people that don't know anything about the market that have been asking me, hey, should I buy gold? Should I buy gold? You know, just because they know I do the stock market. When the average public gets into it, you know, it makes me a little weary. Makes me want to short it. But I can't just short on that. I short on price action, not on speculatory BS. So keep that in mind. All right, we'll go over what I'm in. Of course, I'm in the VOO. That's the long-term, the investing account, right? And I always like to go over it just because I want you guys to know the importance of investing. This is just a small amount. The big money goes to the financial advisor, so I don't have to worry about it. I do call him, you know, once a week. He probably is sick of hearing from me, especially because I drill him with a ton of questions. But I love him. He's a good guy, and he does his best to answer what he can. But this is mine. This is mine. This is my side account. This is me just kind of being in there when I think the market's going to go up. You know, we stay in it. If it breaks the 200-day moving average, we're going to exit out of everything, and we'll wait for new lower highs. So I'm in VOO, and I'm also in VTI, where we got 18 shares here, and in VOO we got 16 shares here. So that's looking nice. It's a nice little investment. We keep adding to it anytime we get pullbacks. Google. So Google, if you guys remember, we ended up taking Google right here on this trend break after it broke out in the morning. I took this a trend on top of a trend. So right here, we're looking at the hourly, so that way you guys can understand this a little bit better. But on the daily, we had this big trend. The hourly, we had this trend. I call this an undercut and rally. This shows a lot of strength to me. These used to really psych me out. When I would see these, I'd say, oh man, I'm cleaning my hands of this thing. I can't buy it now. But really, this is just a big shakeout. Institutional owners will push this thing down fast and hard, sometimes in the pre-market, because you can gap these plays. You can sell into different things, really scare people out. Or, you know, maybe they might start a panic sale. Although Google's really, really big, it's kind of hard to, to really move this. So this is institutional ownership doing this. Big undercut, and it gets bought right back up here. Huge rally, right? And then it pulls, it holds that trend, and when it pushes again, I wanted to get in somewhere here, right? I wanted to get in somewhere here, but I just did not have the confidence to do that. But once it broke high and started a new trend on this hourly, after it broke that new trend, I ended up getting in 100 shares right here, guys. And that was a really good buy. We just held on to this, and we held on to it for 3 days. And I exited once I started seeing weakness here. We've seen a big pullback. When it popped back up here, I decided to exit out 50 shares of my trade. Okay, because I'm expecting the market to pull back. I've told you guys that multiple times. I'm just dabbling my feet into it. Now, if it comes back down here, forms another trend, I might add those 50 shares back, but basically, I was up around 500 shares. I locked in $250 of those profits, and that was an easy, in 3 days, making $500. I like to lock in some of those profits, and we're going to wait. We're going to sit back, and we're going to wait. We're going to see, what pops up in the near future. The only other trade I took, which is not the best take, guys, but is PDD. So a good friend of ours in our Discord, which, by the way, you're more than welcome to join the Discord. It's in the description. You're more than welcome to join us. It's absolutely free. I'll never ask of anything except for your time, the like, the subscribe, and be here for me, because I'm trying to be here for you, right? So it's in the description. If you guys want to join, we meet up every night at 9 o'clock. We do like to record our sessions and put them on there for you, but if you can't make it, you can't make it. No big deal. We're still here for you. Now, I'm not happy with this trade. It took me 2 tries to get into this, but I'm in it, and I'm risking this day's low. I'm down. I'm actually up $1.50 on these 25 shares, but I oversized into this trade. I have an issue sometimes with oversizing. I want to get rich fast, that kind of thing. But I exited out for a small loss. That's okay. I realized what I did. I exited out immediately, and I waited for my setup again, okay? I lost $53 on this trade, which is very minuscule to what it could have been if it really went against me. So I sized in appropriately. I only took 25 shares this time, okay? And I actually took it just about 40 cents higher than where I actually wanted to be in it. So I'm holding on to this thing. I'm using this day's low as my stop loss, and I like where I'm at with this. So let me go ahead and show you on the daily, and you'll have a better understanding. Now, Zamora showed me this, so shout out to you, Zamora, if you're in the chat. Thank you so much for pointing this out to me. We are getting, now, I would like to see a couple more days here. I'd like to see this get a little bit tighter here, getting a little bit tighter. Predator, it's good to see you in the Discord. If you would, join us in the YouTube, if you would, please. We're all in the YouTube, keeping a close eye on things. So thank you so much for joining us, Predator. I appreciate you. But I'd like to see this thing get a little bit tighter here. I'd like to see 2 or 3 more days on top of this 10-day, but it didn't want to. It said, hold my beer, we're going to go higher today. And so I wanted to be a part of that. So I chased it by about 40 cents. Now, some might say, why are you chasing? Some might say, that's not a chase. So it depends on who you are. But personally, if you pull this from where I was at and mark the low, That's 1.83% from today's low. And the average daily range on this thing is 3.6%. So I got half of an ADR from the lows, from my stop loss. I would say that's not a chase. A chase would be something where I'm at 6% from the day's lows, and I'm only 1.3. I'm half the ADR of the day's lows. So personally, I don't think that I chased at all, but I would say, me personally, 40 cents. I wanted to see this thing more at 143.29.30. You know, 123.30 or 143.30. I got it at 143.69, and that's a-okay. You know, you're not going to be able to grab everything perfect. So, Nadayo, if you haven't already, I did put that in the chat. Let's see. Today is the 16th. Yeah, this is what I'm watching. Okay, Mo Wealth, I hope you joined up in the YouTube with us. But yeah, I see the GEFNMAS. Wow, I have not looked at that in a while. We'll go over those in just a minute. So let me go ahead and start going over some of these. We have some people chatting in the Discord. Nadayo, I hope you found the YouTube. I pinned it in the general chat for you. You can just click on that and watch. Yeah, absolutely. Appreciate you guys. Okay, so we're going to get into the juicy stuff, right? So I'm holding PDD. Big shout out to Zamora again. Thank you for pointing that out. That's not one that I really called, but we know that the Chinese stocks are pretty hot. So it's nice to actually see that we could at least catch one of these, right? At least dip my toe in the water and see what's going to happen, because sometimes these Chinese ADR, and you know, another good thing about this I wanted to point out is PDD's moving up while the rest of the market's moving down. That shows strength. That's called relative strength. And we can actually bring up PDD and see what the relative strength index is showing, just so that way I'm not lying to myself here, okay? So it's a relative strength of 90. Now, we like to see it above 90 in order to consider it really strong against the market. But you can see today, at least, was holding relative strength rather than the rest of the market. So things are looking really good. Really good to see that. So I am in PDD. Very nice to be in. Let's go ahead and bring up what Mo Wealth is looking at, because I really do like some of these stocks that he brought up. So GE, slower mover, 2.7%. You can see we kind of have this head and shoulders pattern right here, which I don't like to see. But also, if you look, it's following this 21-day moving average. That is what I like to see. Okay, so we are expecting to see some support here, because look, it's done it 1, 2, 3. Now we're at its 4th time. We're going to see if it wants to hold support here, and if it does, this might be a great opportunity to buy. Now, these aren't buy or sell recommendations. I'm just making a big observation here with a big head on YouTube, right? I don't know anything. I'm just talking here, but I'm seeing support on this, and if I were to try and take a hold of this and not use my breakout or trend break strategy, this might be a good area to take it. But you can also see here, this, if it breaks above this tomorrow, that also might be a nice area for a buy. You know, right here, it dipped right down, held that 21, hold it 21, hold it, and then boom, this thing might take off tomorrow. So holding a new higher low, dipping on that 21-day moving average, that actually looks really good, Mo Wealth. I like that stock. I like the stock, FNMAS. So usually when you got 4 or 5 letters in a ticker, oh my good sweet baby Jesus, look at this beautiful thing. Mo Wealth, that's what I'm talking about, baby. That's what I'm talking about. Let me blow this up. This is what I'm talking about. Now, I played this stock before. I'll tell you why I'm getting so excited about this, guys, because look at this. This thing is on an uptrend. It's getting tighter and tighter and tighter. I think if Adam was here, he would say, you know, one more day. And this thing could use a few more days to get tight again. But this is beautiful. We got this base right here. I like this. I'm going to go ahead and set an alert right here, but just so you guys can see it, this yellow line. We got a base setting up here, okay? We also are holding the 50-day moving average, which is really nice because institutional ownerships they like the 21, they like the 50, okay? And then if it breaks out through this on volume, that's going to be absolutely beautiful, okay? Now, I've played this multiple times. You can see I tell you this. I got to tell you how I messed this stock up. This was a beautiful buy. You know, just looking at the strategy itself, this was a beautiful buy. But I did not take enough shares on this. did not take enough shares. And this is why you need to understand risk management before you start to get into something, because you'd hate to take too many shares and it go the wrong way. In this case, I did not take enough shares, and I just got absolutely disgusted with myself because this could have made my account. This could have made my account. I believe this is somewhere in January. Yes, January 10th. I actually have this up on my date. I should bring this up. We have this beautiful trend here, and it broke out, and I took it right here on the breakout. Absolutely beautiful. Actually, no, right here's the green line. Took it on volume. This thing rip tater chip. I remember I was so disgusted because I seen such a big move, and I was only up like $100, right? And I just looked, and I seen that I was only holding like 60 shares, and I should have been holding like 6,000 shares. You know what I mean? So, you know, it is what it is. You live and you learn. That's why you have to understand what you're risking. You have to take the risk calculator. When I took this at 334, I should have taken 334, subtracted it from previous day's lows at 325. So we would do it just like this, guys. We would go 3.34 minus 3.25. That would equal 9 cents, and you can multiply that 9 cents by however many shares, let's say 600. So 600 shares, if it broke this previous day's low, that would have been a $45 loss. You can multiply. Now we go 1,200 shares. All right, now we're looking at a $90 loss, right? You only want to risk $90? Well, take 1,000 shares. There you go. Bada bing, bada boom. That's done, right? So that's how you do that risk management there, and I didn't do it right. I mean, I made dollars on this thing. It was horrible. Made me sick. It really did. It made me sick. But now back to the study at hand. This thing is getting tighter. It's starting to set up. I like this huge undercut and rally. That shows that institutional ownership starting to buy these things up. So this thing would be beautiful to rip tater chip to the north side. I think it can get at least back up here to the $6 area before seeing some more resistance, but we'll have to see. Always use risk management though, guys. You never know what's going to happen. This thing could tank tomorrow, but I do like the way this thing looks. It's very shaping up. What else were you looking at? POWL. Let's take a little peeky gander. Mo Wealth, I tell you, you're a quick learner, brother. This is nice. I really do like this stock as well. So welcome to the club, brother. You are bringing up some very, very tasty little treats for me tonight. This is a morsel. I am going to set my alert on this as well. POWL is 6.3% mover. This is beautiful. So Mo Wealth, I really appreciate you bringing these stocks. Let's see what else you got here. NTRA. Yes, high tight flags. Love them. Now, this is a little extended, but I see why you're looking at it. I'm going to go ahead and put this on my watch list as well. So beautiful watch list there, Mo Wealth. Really appreciate you. And guys, if you have any other stocks, throw them up in the YouTube chat. It's going to help the YouTube algorithm. The more people we got chatting up in this beautiful Mickey Ficky, the more people are going to join, the more people are going to want to be a part of it. And if you guys haven't already, take a look at my screen right now. I want you to hit this like button, hit that subscribe button if you haven't already. We are trying to grow an amazing community all around. We want to see this amazing community grow, of course. We absolutely love our community. Okay, so now before we go into my watch list, there's a few things we need to go over. First of all, let's talk about the U.S. inflation. Why do we want to talk about the U.S. inflation? Well, because that is what is holding us back, right? And why are we moving up? Well, because we are seeing good productive numbers. Okay, when you see good productive numbers and they are coming in, you're going to see the S&P 500 start to head higher because they think that old Papa Powell is going to cut rates. When he cuts rates, that's going to make it easier for people to borrow money. That means people are going to go into more speculative things like the stock market. Okay, and right now we are currently at the U.S. inflation is at 3.4%, showing that we have not come down from the end of year at 3.4% of 2023. Now we are down from 2021 of the record inflation of 7%. That's bad news bears. 2022 down 6.5%. You know, when you print money, this is what happens. And then now we got down to 3.4%. That's where we are currently at right now. And the Fed funds rate is currently sitting at 5.5%, or if you want to get down to the nitty gritty, it's at 5.33%. He would like to bring it down, and he would like to cut those rates. And when is he going to cut the rates? That's the question. So we'll go over that in just a second. But why is the economy doing so well? Well, if we look at all the information that was given today, you can see the PPI. The PPI was actually came out a little bit stronger than expected, okay? And we can click on this and we can actually see what PPI is. All right, so PPI is the Producer's Price Index. It's the producer's price. It measures the change in price of goods sold by manufacturers. Now, this came out a little hot, and you could see that it came out a little hot in the S&P 500. We had a little drop on Tuesday, but it got bought right back up. It was almost like the market did not care so much that that was happening, okay? Now, what happened shortly after that? Fed Chair Powell came out. He had a few things to say. He still stayed the course on we are going to bring inflation down to 2%. We are going to stay the course, and things are looking good. He also said a few times that he did not have that he did not plan on raising those hikes, which he said before. There was a few other things that he said that brought the market kind of down real quick. You know, anytime he says he lacks the confidence, when he uses the confidence word, he doesn't have the confidence that the overall market, or not the market, but the overall inflation is coming down, or he doesn't have the confidence in the market coming down as quick as he expected it. You'll see the market come down real quick, real sharp. B. Stewie, Dell, we will definitely go over Dell today. That thing is flying. Core CPI. So this is where the market started ripping, guys, because the core CPI, the month over month, came out the same as the forecast or lower than the previous year. So meaning the core CPI, which we can click on that just so we know. So that's Consumers Price Index. What I want to read verbatim, but from my words, it is what you and I are paying for things, okay? So the core consumer price index measures the changes in prices of goods and services, but it excludes that food and energy. So not food, not eggs, not the price of eggs, not what we're paying for gas, nothing like that. And then the year over year came down as well from the previous year. So it's actually showing economic contraction. What else came out was initial jobless claims. That was today. Now, it was the forecast was actually 219. It came out at 222. What's initial jobless claims? That is people that are filing for that unemployment. That unemployment, when people file for that unemployment, that is showing that less people are going to be spending money, which is going to show economic contraction as well. If less people are spending, then less things are getting bought. Okay, if less things are getting bought, that means that there's going to be more supply rather than demand, and that's going to show that that prices are going to be able to come down. Okay, so after looking at all of that, we can see the market took that very, very well by heading up to the north side. Now, with all of that data coming in, I keep a very close eye on this CME Fed tool. Why is this so nice? Well, because this gives us an idea of what the overall market is going to do. So go ahead and look at my screen here, guys, and you can see in June when we have the meeting, June 12th, right here, you can see where the meeting is right here, guys, June 12th, 2024. When we have this meeting, there is going to be a decision, and that is going to be whether he's going to keep rates the same or if he's going to lower them, because we've already said multiple times that he does not plan on bringing up the rate hikes at all. He does not plan on hiking those rates at all. All right. So that being said, in June, it shows 21.3%. We are going to stay. We're going to stay between 5.25 and 5.50. So we'll stay. Right now, we're at 5.33. So we're right there in the middle, and we plan on staying. Now, July, this has changed a little bit since the last time we looked. Check this out. We are now at a 30% chance that we might actually come down a quarter of a point. Okay, that would be beautiful for the market. If we come down a quarter of a point, you better believe the market is going to go up. That's going to be absolutely beautiful. Now, September is where it gets really cool here, guys. If it'll load. Is it September? Let's see. Probabilities for July, June, July, September. Let me reload this. Where are you at? Oh, they must be updating it, of course. They're deciding to update it when I decided to take a little peeky gander. It's either that or my internet's going down. I hope that didn't happen. Let's see if we get something else to come up. Yeah, it's funny. We're going over this, and they're probably updating it right now, of course. Hey, that's okay, guys. Well, anyway, in September, you're going to see that we are going to have a nice little piece of information there, and that is the Fed rate hike might not just come down that half a point, but we might come down, or I'm sorry, not just a quarter of a point, but we actually have the probability of coming down a half a point. And I actually just heard the story because I'm listening to this new book, One Good Trade. That one good trade, if he does a nice little surprise there and comes down a half a point, that is going to be wildfire for the overall market. So let's go ahead and look at Dell, and then we're going to go through my stock watch list, get you guys all set up for tomorrow. Yeah, Dell's been ripping, guys. This is absolutely beautiful. Adam, my right-hand man, was actually looking at a base breakout here at 133.31. Of course, I'd like to see this get a little bit tighter on the 10-day before ripping, but this thing did its thing, and we like to see it on volume. Do keep in mind if you're in this, excuse me, earnings is going to come out on the 30th. That's some good water. All right, so let's go over some of this stuff, guys. GTHX, that's a therapeutics, so this is a make or break. It's a fast mover at 9% as well. I'm looking at this base breakout here at $5. If this thing can break on $5 on volume, this could be a very nice buy. Now, remember, anything that I say on here is my ideas. They are not yours, and you need to treat them with respect. Treat them with them, understanding that they are my ideas and they are not yours, okay? ACRV, we have a trend break here. This looks absolutely beautiful. I'm sorry, not a trend break, but we have a trend holding a 30-day moving average, and you can see 1, 2, 3, 4, 5, 6, 7, you can call this 7, 8, 9 times has it held that 30-day moving average. Now getting extremely tight here, guys. So what am I going to do? I'm going to bring this down right here. And if it gets above yesterday's high and breaks through this trend on volume, you better believe I'm going to be there to buy this thing up. Now, remember, this is a therapeutics. These things can do some silly crap sometimes. It also moves 11.9%. That being said, this is a rip your face off kind of stock, so be careful. Next up is SHIP. If you guys remember, I took SHIP on the base breakout. This is the pinnacle of base breakouts. If you want to see a good base breakout, go to SHIP, look at SHIP, and just look right here. I mean, this is beautiful. 972 on volume. Even if you look at the 5-minute, this base breakout on the 5-minute was absolutely perfect at $9.73. If you need to know of a good base breakout, look at SHIP at $9.73. Okay? Absolutely perfect. Why did we get out of it? Guys, why did we get out of it? Right here is earnings, right? We exit on earnings, okay? Of course, it never would have came back down and even stopped me out for break even, but I don't care. I don't give a shit, okay? This thing had earnings. I do not gamble. I exited out for a nice win. I think we made a couple $100 on it. No big deal, okay? IREN, this is a nice trend that happened today. I actually missed this. I ended up playing a second trend on this. This looks yucky. Let me go ahead and put it on here for you. Here's the hourly, and you can see this is the daily trend. On the hourly, if we zoom in, I played right here on this breakout. Well, actually, I'm sorry, I missed this breakout, but then if we zoom in on here on the 5-minute, you can see this is another trend here. It took me 2 tries to get in. I got in here, it stopped me out. When it tightened back up again, I got back in on this second little piece trend, and we rode out. I exited most of my position at the break of this top. I moved my stop up to 60, and it came right back down and stopped me out. So I had a nice little win here. It was only around $50. I could have made a lot more, but because this was more of a speculative stock, and I missed the big run up, I missed my main trade here, I decided to go on lower share size, which, you know, I know a lot of people when you're watching this, you go, well, come on, you know, you play all these trend breaks, you do this, you do that. When I miss my main trade and I'm trying to get in on a secondary trend break, because I've missed my main trade, that's not a 5-star setup anymore. You know, it's just not. And so for as much as I would love to say, hey, I'm all in, I'm buying 2,000 shares of this, 4,000 shares of this, and I'm going to make some money today, a lot of times that's what gets me hurt. right? A lot of times I can't hold on for these bigger moves anyway, and that's why I exit at these tops. And so I take smaller share size, guys. That's just what I do, okay? Let's zoom back out here and let's look at GCG. So you guys, I've talked a lot of crap about the marijuana stocks. GCG is something that, or CGC, Canopy Growth, this thing is a lot better than Tilray in my opinion. But we had this huge downtrend. It broke up through it. I came a little late to this party too, but there was a nice base breakout here at 10.15. We ended up playing this to the upside. I exited most of my shares out here. I also found out when we started trending down here, I couldn't actually short this thing. I was going to short this and just take a few scalp trades playing this trend, but it wouldn't let me. Canopy Growth, you cannot short actually on the on Thinkorswim, unfortunately, or I could have made a few scalp trades. PDD, yeah, I got in on this base breakout, like I said earlier, about 40 cents higher than I wanted to. A-Lab looks like it's setting up this base breakout right down here. It has a trend break on it. Now I'm just waiting for it to play the base break, and then I'll be in. Just waiting patiently. This is a big IBD. Everybody's watching this because this is more of a, if I remember right, just an AI stock. So I think it's A-Lab, right? Let's take a look at A-Lab. It's a newer IPO. Let's read about it, guys. I want to read about this because I haven't yet. Astria Labs manufactures semiconductors. It offers smart retimeters, riser cards, and GPU booster cards. The company includes Aries, and then it has all their things. So it's more like a semiconductor. But it must be solely focused or mainly there specifically for AI. You know, so they're selling it for AI. So that's why A-Labs is so important, especially because we're in a hotter market. Semiconductors are hot, and this is a newer IPO. So this thing could really be powerful. So let's keep that on your watch list. CADL Therapeutics. This was a base breakout here, guys. We ended up missing this. I ended up playing this on the 5-minute, just kind of like you seen on the last trade. The IREN, the IREN and the CGC. I played it just the same. I missed the base breakout. Then it set up here again. I ended up playing a little bit here. Exited for a lot of it out. Seen it setting up again. Played for a little bit and then it stopped me out. So we made a little bit of money on this yesterday, and then today it just pulled back. It's just hanging out. So I'm not going to be playing this anymore, but this was the base breakout. We called this out 2 or 3 days ago. We were keeping a close eye on this, so that's beautiful. I'm glad that some of you were able to actually get into that and take this trade. AVGO, this had the daily base breakout. We're just going to wait and see what we got going on with this thing. If this thing can set up another trend break for me or get really tight and make a base breakout for me, I would love to see that because we're right here at these all-time highs. It made new all-time highs. Don't get me wrong. It made new all-time highs today at 1,445.40. Now, if it can just base out here and let the moving averages catch up, that would be an absolute beautiful sign. KLAC, also a semiconductor, broke out of its base. Absolutely beautiful. Of course, we need to go over GME. Man, I tell you, I do like to dream, guys. I do like to dream. I had this marked out way before because if you look at the daily way back here on GME, I'll just bring this up for you guys. Because this is what we used to do. Holy Diver and we used to short these very speculative stocks. And what we would do is we would look back here. It's called gap up short, okay? And it would gap up. I'm sorry, let's take a look at this. So we see all this huge volume down here at the bottom, right? And that's what we're looking for, the biggest areas of volume if we look to the left, meaning this is where it's trading over here on the right, okay? Way over here. We're looking all the way over here on the left side, and we're finding these huge areas of volume. So like here, this is zoomed out. This is maxed out. This is where we're at right now. This is where it gapped up to. This line was drawn way before it even came up here. Why? Because if we zoom in on this area, this is the biggest area of volume traded. So we zoom in and we see the VWAP, the volume weighted average price, 1, 2 on the highest traded volume areas, right here, right here, right here, and right here. So then we look at the psychological $80 area, not any other price. So we look right at $80. Now, if we zoom over, where did this stock stop? Well, you can see it came right up to, you guessed it, $79.99. And this is why I like to dream, okay? Because even if you only took 100 shares, you know, you take 100 and multiply that by 30, you know what I mean? You got $3 grand right here, just taking 100 shares from here. Now you could go as far as to saying, well, if you knew it was going to be there, you could take 1,000 shares. Well, guess what? We're up $30,000, guys. That's a make your account. That's a, you know, some people don't make that in a year, you know, at least teachers. You know, I really wish they would, especially the way I went through school. Holy cow, those teachers need to make more money. If any of my teachers are listening, I'm sorry. I really am. I'm really sorry. Man, it was rough in school. But yeah, this thing came right up to that $80 area and sold off very, very hard. It did it in the pre-market. We can look at the hourly here. Let's look at the hourly. And you could just think, you know, right here, look at that. Absolutely beautiful. Right at that $80 area, you know. Actually, it was $80 even, excuse me. $80 even. And then it just failed. And I had people reaching out to me, hey, what do you think about GME? What do you think? And, you know, I said, I don't think it'll ever get back up ever again to this $80 area, you know. And some people might shit on me for that. I don't care. That was the highest volume ever traded back here. And it finally made it back up there. And you know, you say, well, it went all the way up to 120. Well, the thing is, the price went up to 120, but the volume weighted average price never got above 80. Okay, meaning the weight, the majority of people on these 3 days, most of them bought at 80. Okay, so when it got back up to 80, they all exited. Nobody wants anything a part of the stock anymore, and this thing continued to fail. Now we played this a little bit. I played this short on day 2 when it showed this trend and a base trend break. I played that and we exited out of it. Now you can see that you know, I played a little bit here to the long side, made a little bit of money, but I was only playing on support and resistance. They were very small trades. These aren't huge trades that I'm trying to buy and hold like I'm trying to teach you guys on trend breaks or base breakouts. Okay. I missed my 80. I just kept an eye on it. I played a very volatile stock. I made probably about $700 trading this stock in the past 3 days. I'm very proud of myself for doing it, but at the same time, this thing is not going to be a trader for long. So when people ask me, hey, what's going on with GME and AMC? Well, you're probably going to see some volatile pops here and there. You might see some volatile pops. Maybe it gets down to 20 and it pops back up to 30. Well, I'll be there to short it. Okay. These are my trade ideas, not yours. Next up, NVIDIA, very strong. It had this base breakout right here. Absolutely beautiful. It does have earnings coming up. I said that, you know, multiple times it's going to probably trade within this range. It probably is not going to get above that 970 area until after earnings, or who knows what's going to happen to earnings. That's a gamble. Maybe it pulls all the way back down here and starts its rally all the way back over. I don't know. But what I do know is this was a beautiful base and trend breakout. You love to see it. I love to see it anyway. I want to see NVIDIA soar. PSTG, we called this base breakout on Monday, and it broke out, baby. This thing was absolutely beautiful. It got really, really tight here. I did not get a part of this pure storage. UAL, I'm telling you, I don't even want to talk about UAL. So BPMC, 4.4% is getting really, really tight here. I really like to see this. So put this on your watch list, guys. You can see if we look all the way back here, there's multiple areas of the resistance, but if it can break out here, this nice tight base on volume, I think this would be a nice area to try and get into. So keep that on your watch list. TOST, you can see it's got this long, long base. Now it's just got all these inside days, like really, really tight. Like it's just, you know, it's just really, really tight. And we need to wait for these moving averages to catch up. Then we'll find a nice base for it to break out of, and bada bing, bada boom, this thing might continue on higher. ON, I just keep resetting my alert. It keeps coming up, retouching this top, and then coming back down. So now it's trading within this range, still extended from the moving averages. I'd like to see that kind of come back up. Let's see if the CME, yeah, okay, so I think the CME Fed tool, there we go. Now we can look at September, guys. Yeah, they were just updating, no big deal. Okay, so check this out. This is what's cool. So we have a higher expectancy now, and I've been telling you guys in September, I'm expecting it to come down 1/4 of a point, and you can see that here in the Fed tool. Now that we have all this data that came out, we have a higher probability of being at 1/4 of a rate cut, okay? We actually have even a higher expectancy now to be down 1/2 a point. At 6.8%, we could be down 1/2 a point at this time. We are less likely to be at the same rate of 5.5, okay? So we are more likely to actually come down 1/4 of a point in September, and we actually finally have a 16.8% that we could come down 1/2 a point. So it's very, very cool. It's something that I definitely would like to see you guys using as a CME Fed tool. Even if you don't know anything about the data and you just watch, what I do and what I say when it comes to that data, it's all good. You're more than welcome to, to just keep an eye on what I'm saying, what I'm doing. But if you look at the CME Fed tool and you click through those months, you'll have a better idea of what the market is going to end up doing. And what I mean by that is watch. In September, if we're not already heading higher, in September, I have a feeling the market's going to go kablowy right to the north side. And just while we're doing this is just helping me grow, guys. Take a look at my screen really quick. I want you to smash that like button. Let's refresh this to see how many likes we got right now. We got 11 likes. That's awesome, guys. And make sure, if you haven't already, hit that subscribe button. And that's all I'm going to say. Just smash that like, smash that subscribe button, guys. That's me trying to continue to grow this amazing community. If it wasn't for you guys, I wouldn't even be here right now. I absolutely love the fact that you guys are here helping me out, and we all share these ideas. I mean, I've gotten plenty of ideas from you guys. I've made money from the ideas that you guys have shared with me. So thank you so much for joining me. Thank you so much for being here, guys. You guys are awesome, and I love you. So ON just trading within this range, but look at this daily, guys. This daily is looking amazing. You gotta love that daily, baby. And it keeps just trying to pop above it, but it's not just yet. So it's just getting tight here. I think it's saying, hey, moving averages, come on up here, and let's see what we can do. So I just keep resetting my alert. Each day it keeps going off. This day it went off. This day it went off. This day it went off. And, it's going to keep setting me off. But unless I see the volume behind it, I'm not going to get in it, guys. So ON, it's a sneaker store. And this right here is Skechers. Skechers is also just kind of lingering around this. Had a beautiful earnings day, a nice push up, and now it's letting those moving averages catching up. It's digesting this big move. So Skechers is great. I do like Skechers. Actually never wore a pair, so maybe I shouldn't be saying that. Eat should actually go with the rest of my, let me put these with the rest of my food stocks. And we can go over our food stocks right now. So we know that when the market started ripping to the north side, we didn't see a lot of the money going into the food stocks. Maybe they just need more time to catch up. We'll definitely see about that. So we got EAT, EAT. We got Wing. Wing is just pulling back. It's looking really nice here. We can see it has support on the 30 and the 50-day moving average, but mostly the 30-day moving average. It's just forming this base up here. That's where I have my alert, is right at that $400 area. I do not care how long this takes. I do not care. That $400 area is not only very psychological, but it also is forming a beautiful, beautiful base. So I'm more than happy for it to just trade sideways here and get tighter and tighter. Give it 2 weeks, give it 3 weeks. I don't give a shit how long it takes, Wing. But this thing was a former runner, a former leader, okay, that broke out of this base and now is making a base on top of a base. That is beautiful sight to see. Okay, a beautiful sight to see. Usually the second base is not nearly as long as the first base, but this second base, when this thing breaks out, I promise I'm going to be there. I'll be there to alert everybody else. CMG also is creating a trend, and it's also found support on the 21-day moving average. Look where it's very close to. I have a alert on the 21-day moving average, and I also have an alert above the trend. So if we get it, I might dabble a little bit down here playing the 21-day moving average and going to have a really, really tight stop just below the 21-day moving average. And then if it wants to break out of the trend, that's where I'm going to add into that. So CMG is looking good. Now we also have Sweet Green, which is setting up absolutely beautifully as well. Now a little extended from the 10 and 21-day moving averages. I want to see Sweet Green rip, tater chip through this on higher volume. We also have Kava, but Kava has earnings coming up here, so I'm not too excited for it. I'm excited for the earnings, but I always say earnings ruins everything unless you know how to play earnings. I do like to play earnings. Usually if they have a bigger move on, shit earnings, I like to fade those. But if they have higher moving on earnings and it's on higher volume and it breaks, they're called episodic pivots. I like to play episodic pivots or gap up continuations, we like to call them here. And if it does that, I really love for it to, I really like to play the continuation. So we'll see what Kava has for us. Maybe it does the same thing that Sweet Green did and then just kablowy moves to the north side and we can play its continuation, but we'll see. We'll see what happens there. We also have Hood and Coin. They're just kind of trading sideways. They haven't done much. They're below their 50-day moving averages. Well, Bitcoin starts to come up higher. We're not seeing a lot of movement out of Coin. We got a few more, and if you guys would like, throw up what you want. Well, don't throw up, but put up in the chat what you would like for me to take a little peeky gander at. I'm happy to do that for you. I'll just keep on going through some of these. I have quite a few stocks on here, guys, so if I haven't went over them yet, I might be going over them soon, but if you want to hear them right here, right now, let me know. I'd be more than happy to take a little peeky gander just for you. FIP infrastructure, a little hot right now. You can see I missed this. Actually, I think I may have played this trend. Beautiful base breakout, beautiful trend breakout. This was a double whammy in my opinion. You have this base breakout. Adam actually pointed this out to us. And then there was a trend breakout right here. And that was right on top of its base on volume. That's absolutely beautiful. Then you get another trend breakout, another setup. And this kind of reminds me of MRUS. If you guys watched the trend breakout strategy, that was just a few videos ago that we did for you in our Discord, which if you guys haven't already, join the Discord. It's absolutely free. We go over trades and strategies and all that BS just like that. And just a couple days ago, we talked about MRUS and how we had multiple areas of base breakouts, trend breakouts, where I just kept adding and adding to the play, and we made a ton of money on it. It was my best trade of January. I absolutely loved it. Let's see. So we got AFRM. Just do this. AFRM. So why do I like AFRM? Well, it's a fade. Anytime it fades, I'm telling you, I love to short this thing. Now it's starting to really just get pretty well beaten down here. How much lower can it go? Well, nobody knows. But what I will say is this. I like to fade it. So while the market heads up and a firm heads down, maybe we go ahead and do some silly things like this, AFRM, and we zoom out on the daily and we look at, well, where are the anchored VWAPs? We have a ton of anchored VWAPs on here. We could go ahead and go over it very, very soon. But if you pull it off of key areas like earnings and you set up these anchored VWAPs, you can see right here, if we just spread this out a little bit, you can see if it pops up and smacks into this 3258 area, that might be a good area for a short. But I'm telling you, this 200-day moving average, if it can't hold it, it's going to head much, much lower. So right here is this area of resistance that's trying to act as support. But if it breaks down this area, this might be a key area of a breakdown. Excuse me, guys, a breakdown here. So we had multiple areas of support, and if it doesn't and it starts to break through this might be a nice area to short for continuation lower if it doesn't get that bounce off the 200-day. And you guys know anything below 200-day moving average I do not like. And you can see here before, when this thing broke below its 200-day moving average, this thing just kept heading down, 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 down. And then the only support it had was after it got above its 200-day moving average, it had this beautiful pop, and then it started heading lower again. So if we break that 200-day moving average, you better believe I would like to make a little money to the short side on that. So would love to see that. You might like to hear this, Dan, Bob Dan, if you're with us right now, is PPC. He's been watching this for quite some time. PPC is Pilgrim's Pride. I think this is a consumer cyclical. I'm not 100% sure about that, but you can see we've been riding this 10-day moving average, looking absolutely beautiful. We had a base breakout here at $36. ANF. Now, I bought ANF on this break here. I added to it here, and, I let this thing go. guys. I let this thing go. This is going to be the fish that got away. I do this quite often. I have a hard time holding on to things. I really do. I do, and that's one of my biggest issues is I have a hard time holding on to stocks. Of course, looking at this in hindsight, well, why the hell did you do that? Well, I tell you, it never broke the 10-day moving average. So I don't know. I have no idea why I did this. I ended up buying it right here. This was my first buy. This was my ad, and it never even got below my ad. So I have no excuse for this, but remember, you're a loser unless you're learning, guys. You're a loser unless you're learning, and I learn something new every single day. That's why we join up. That's why we do this. And if you're here listening now, you are one of the same. You are one of the same. You want to be here. You want to learn. You are working every single day. You're here on a Thursday night at 10 o'clock Eastern, and you're trying to learn something new. And I bravo to you. Bravo to you. Not a lot of people are doing that. So congratulations to you. And now we're both learning from this. If it didn't break a 10-day moving average and I got in just above the 10-day moving average, why in the hell did I exit this beautiful daily downtrend? It was a leader. Look at this. Let me blow this up. I'm going to argue with myself here for a minute. Huge move up. Beautiful pullback. When the market pulled back, the market starts to rally. It breaks this trend on volume. And guess what? I take a beautiful trade on this. So proud of myself. Beautiful trade. Got in. Added to this trade. And then what? I exited for what reason? For what reason? It never broke a 10-day moving average. It's continuing higher. This is an absolutely beautiful stock to be a part of because if you look on this last rally, look at this. It held this 10-day, never closed below it, all the way until right here. We're literally talking, if you would have taken, let's just look at this. This is the trend break right here, guys. And if you would have taken this stock on my trend break strategy, and you literally held this thing, well, we'd have to wait till after earnings. So we'd have to say first, right here, we'd get out before earnings, you make 23%. Then you could play the base breakout right here. Same strategy, guys, base breakout and trend breakouts. You play the base breakout right here on volume, and then you hold this thing because it doesn't close below the 10-day moving average until right here. Let's say you'd exit the next morning. Let's just say 60%. 60%. Easy. 3.7%. This is probably the easiest stock to hold, and here I am wishing I still had it. Next up, I'm just keeping an eye on this bank. I need to put these with my bank stocks, and we can actually go over the bank stocks really quick because they are still pretty hot. Where did I put those bank stocks? Let's see here. Bank stocks. We're looking for Goldman Sachs. We're looking for... There they are. Goldman Sachs. Let's take a look at Goldman Sachs, guys, because Goldman Sachs is ripping. Now, look at this. Daily break of its top trend here, okay? Huge daily top break here, and it did it on volume. Look at this. It had earnings come in, rip up to the north side, created a nice little base top, and then it broke through. It came back. It retested this area. I love a nice retest, and this thing just took off. Now trading at 468.25. We also have Wells Fargo, which is looking really nice. Not the leader. Goldman Sachs is definitely the leader, but it also broke out of this daily top, trying to hold this 10-day moving average. Now, it also had a nice little trend break. The issue with this is that 3 days later, had an undercut and then a rally, which those are the hardest to buy, but usually sometimes can be the most profitable. Let's go ahead and look at a couple more here. And if you guys don't already, if you don't put anything up in the chat, we're just going to keep doing what I like to do. We got silver here. So silver's back at that all-time high. You guys already know I'm bearish on this. I can't really get behind it. I'm not saying that it's going to come down. We had this nice breakout above this, nice little cup here, and now it's back at these all-time highs. I'm telling you, when the public starts asking you about, precious metals, it makes me really question, you know, if precious metals are going to continue higher. But you can't argue with price volume. This is looking really good. It is above these moving averages. The moving averages are lined up. It is looking nice. The 200-day moving average is starting to curl. So this is ProShares, the Ultra Silver ETF AGQ, and it is looking very nice. It is looking very nice. You kind of got to give it up to that. But also keep in mind there is a little bit of resistance here, so I'll just mark this out. I call this the murky waters because this is going to be your area of resistance. And it's right in that area. There's multiple areas here. 1, 2, 3, 4, 5, 6, 7, 8 areas of resistance. And now that it's sitting into this area, and you know it's an area of resistance because last time it got up here, it sold off incredibly hard and incredibly fast in an incredible amount of volume. So will it do it again? I don't know, but I would say our chances are at least seeing a pullback in this area. If it wants to rip tater chip and get through this, we might be more in the clear, and then we can use this area as support. But as of right now, I'm still going to say I'm a little bearish on silver. We also have a triple, quadruple top here on SLV, which is another ETF. In silver. So if I just mark this out, you can see right here, if we come over here, it's looking just like the other ETF, so not too much to talk about there. This is a gold stock I've been watching. It's looking a lot like silver, although it's much stronger. If we want to look at gold, we can look at slash GTC, I believe. No, GLD. Yeah, there we go. Here's the gold ETF, guys. Much greater. I talked about this break. Very huge break here, guys. Very huge break. 1, 2, 3, 4. 4 areas. Huge breakout. My only chance to get in this was right here, and I missed my chance. Look at this beautiful trend break, guys. I bring this up every time we look at gold because we need to train our eyes. We need to train our eyes to see these, to have confidence and confluency across multiple time frames to take these things. The market started to head up. Gold was following the market. We had this beautiful tight area on a 10-day moving average. And look, I mean, it's beautiful. That was a beautiful move there. We could have taken HWY, which was a much faster gold mover. HWY is, HMY, Harmony, gold, and that was a much faster mover. You can see it's set up just the same, 3.4%, so it's a faster mover, undercut and rally, and it could have came all the way up here and stopped you out at 18% win, guys, 18%. Now, of course, I missed my chance on taking that. You're going to hear me say that a lot. I missed a lot of things, but it's okay. Where's the next trade? You know, where's the next trade? That's the main thing. We keep on looking for the next trade. PASS, this thing broke out of its base well down here. Now it looks like it's trying to form another base up here, but it's just not ready yet. It needs some more time. We'll look at just a couple more, guys. And yeah, let's see. LAC, looking good. Actually looking horrible. I don't know why I said that. We'll take this off our watch list. EVER, we want to make sure we keep an eye on this just because this was a nice base breakout. Another one. Adam actually took this, but because of earnings, I always say earnings ruins everything. Had a beautiful move up, but you got to exit because of earnings, because if you haven't been shit on yet, you will eventually because of earnings, okay? All right, guys, just while I got you here, take a look at my screen. This is self-preservation. What do I mean by that? Well, I want to make sure we're growing this community. I want to make sure that we are all here. We're all on the same page. Let me hit this refresh button, see what we got. Thank you so much for the 12 likes. I appreciate all of you. If you haven't already, hit that subscribe button. Smash that like button while we're here. And guys, I want to say thank you. Huge shout out to all of you. I wouldn't be here if it wasn't for you. So thank you so much. Thank you so much for being here. Thank you so much for joining up with me. I'm going to take off now. I'm going to enjoy the rest of my night. I'm going to grab something to eat. We're going to enjoy the night, and we're going to get ready for tomorrow's trading day. I hope you learned a little something on base breakouts, risk management, trend breakouts, the CME Fed tool, how the overall data works out with the Fed rate hike decision. I hope you learned a little bit of something, and if you did, for that, hit that subscribe button, guys. And we will see you. I'll have to look at the schedule. I don't think we're doing anything tomorrow night. I think we're going to take the weekends off, so I will definitely throw you some shorts out there to keep you entertained, to keep your mind working, so we can keep on keeping on, as we like to say it. So thank you so much for joining me. We will see you in the Discord probably Sunday night or Monday night. We'll definitely, I would say Sunday night is probably the next night that we're going to be on Discord, but I'll still be in there chatting with you guys just like we always do. All right? So good night. Peace. Thank you guys. You know I love you. I hope you have an awesome night.